Hey, what's happening, guys? Dan Darrow here with another Options to Play video update. We have, for a couple months now, really enjoyed just an amazing move higher in tech. So all sorts of tech, not just the big names like I'm going to talk about during this video. Been great action in all sorts of different names within tech land, and recently, well, specifically. Um, 2 weeks ago, we had really our first round of selling, our first significant down day in a while, and everybody kind of put everybody on alert, waiting for the next major move lower to come, right? And for the last week and a half, we've heard just numerous people calling for the next major correction, the next major down move, the next leg lower, right? And the truth is that may end up happening, but right now, it seems like it's going to be a very difficult prospect with FANG names acting as strong as they are, right? So, what I mean is, Apple, look at the chart of Apple. It's just surging to its high day after day after day. Microsoft surging to a high day after day after day. Facebook, new high, right? Amazon, new high day after day after day. And you're saying, okay, big deal, right? 4 or 5 stocks doesn't matter that much in the grand scheme of things, but it actually does matter quite a bit because for the Qs, right? If you're looking for a pause and or a pullback in the Qs, like a lot of people are, it's going to be very difficult to get seriously net short, right? When 45% of the Qs is in those 4 or 5 stocks and they just do not stop going up day after day after day, right? That's not an exaggeration. 45% of the weighting of the Qs is in those 4 to 5 stocks. So Facebook or Apple, Microsoft, Amazon, Facebook, and Google. That's 45% weighting the Qs. For the SPY, right? Definitely a more broad average. So lots of different types of stocks versus all very tech heavy like the Qs. But 20%, actually a little bit more than 20% of the weighting in the SPY is those 4 to 5 stocks. All right. So what I've been doing and what I've been kind of talking about for the last week is I've really been focused on those names for trade opportunities, yes, but also as like barometer of the overall market. If those names keep surging intraday, day to day, right, week over week, it's going to be very difficult for us to sustain any moves lower, let alone a major correction like a lot of people are calling for. So I'm not saying that a major correction won't happen because I really don't know. It might happen, but it's probably not going to happen until names like Apple really start to pause and start to roll over and do some serious damage, right? And right now, Apple is so comfortably above its 8 EMA, and it never even tested its 20 during that pullback in the market a couple of weeks ago, right? So you can at least use these as kind of a barometer for the overall risk appetite, right? If people are really nervous, then Apple and Microsoft and Amazon and Google and Facebook, those names should really start to show weakness, right? Like they're not going to be pushing higher day after day after day if the market is really going to take like a serious leg down, all right? So in terms of of trading, right? Like I'm keeping the hedges in place, like the SPY, the Q hedges, but like I always stress, time is important when it comes to hedges. Okay, so I like 2 months minimum. I will put on short-term stuff if I think it's going to move like that day, the next day to the downside. So I'll be maybe a little bit more aggressive with like the shorter-term expiration if I think it's going to happen right away. But generally speaking, hedges I like 2 months time frame minimum. All right, and then once it gets within the two months time frame until expiration on the hedges, I'm thinking about rolling, unless it's moving like materially in my favor. So like in March, the hedges got down within less than 2 months of until expiration, but because it was dropping so fast day after day, it didn't make sense to roll it right away, right? But right now, when things are kind of still grinding higher, I want at least 2 months premium on those contracts, on those hedges. So right now they're out through September. Once we get through July expiration and into potentially August, then we can think about rolling those. And if we still haven't had a correction, then probably push those out until maybe October, even like November. All right. So I am sticking with the hedges because sometimes the move to the downside can be unpredictable, right? But at the same time, I'm not aggressively going after it until I see some weakness in those FANG stocks because the continued strength and the continued surging in those names is going to make it really, really difficult to sustain anything on the downside. All right. So if you like these videos and you're looking for more information on option hedging or earnings trades with options, which should be coming up soon because the next quarter earnings season starts in a couple weeks, please follow up with the link in the description of the video for more information on options to play. All right. Have a great night. Stay well. And I will talk to you all tomorrow.